This episode of Bulletproof Cash Flow is brought to you by Realty Dynamics. Learn how people like you can build substantial passive income while creating wealth for the long term through real estate investing. Visit rdyne.com. That's RDYNE.com.
I wanted to touch 1 million lives in a meaningful way before I exit. So either it could be like helping people make more money or helping people who needs money. So right now I'm supporting multiple charitable causes and in India only, but eventually I wanted to go global. I wanted to position myself in a way that I'm able to pick any projects anywhere in the world that's geared towards women and children.
Working because you want to, not because you have to, is financial freedom. And we want to help you create that. Welcome to the Bulletproof Cash Flow Show. We're going to teach you how to achieve lifetime financial freedom through real estate investment. Your host is a multifamily syndicator and property developer. He's done deals reaching into the hundreds of millions of dollars. You'll hear from experts in all aspects of real estate investment, finance, development, and management. Everything you need is right here. This is the Bulletproof Cash Flow Show. And this is your host, Augustino Pintus.
Hey everyone, it's Augustino. As a former technology executive that made the leap from tech to real estate, I can honestly say two things. One, it was the great decision, at least for me anyway. And number two, that the corporate experience has given me a head start in running our own portfolio and acquiring assets and, of course, running a business. Now, today's guest found the same sort of thing. Her corporate tech career not only helped her with her investing journey in real estate, but also helped others find their path to financial freedom. Now, she is an IT professional turned full-time real estate investor and syndicator. The goal of her work is to provide other investors with the right knowledge to be able to make wise investing decisions aligned with their long-term financial goals in order to achieve financial success. She's also the host of the Real Estate Vibe podcast. You should check it out. It's a top-rated show. With all that, I'd like to welcome Vinki Loomba to the show. Vinki, thanks for coming on.
Thank you so much for having me on your show, Augustino.
You bet. Now, I was on your show the other day. It was so much fun. So looking forward to having more fun today. It's going to be great.
Likewise. Thank you.
Now, guys, if you guys like what Vinki has to say, you can reach her via our contact page at loombainvest.com. We'll include a link in the description. Okay, Vinki, go ahead and tell listeners a little bit about your journey.
My journey, where do you want me to start?
Well, I guess you were in IT and you hated it, so you decided to do real estate. Talk about that.
That's a good one. So I do have a strong IT and academia background. I'm from India, and like most Indians, we come here to US and we land in IT. That's our, I would say, common trajectory for most people, because we are tech savvy, because when we are growing up, our parents just tell us, go to school, go to college, get the education, get into IT and make something out of yourself. And I think I was on that trajectory. And after coming here, during my IT career, I got a chance to do executive MBA. And I did that. And during that time period, we bought our second home. And guess what? By default, we became the landlords. When we became landlords, we got introduced to the passive cash flow, because we were getting $500 passive income every month. And my husband's like, whoa, that's pretty cool. We're not doing anything, plus mortgage is being paid. So let's multiply this. We started multiplying that, and I got my realtor license because I thought, oh my God, this is like a cool way to make money. And we started investing on the retail side as well a little bit. But at one point, the portfolio kind of out of our, I would say, out of our area of expertise to manage it. Let me put it this way, because we were both IT executives and it was hard for us to deal with landlords, tenant, termite, and toilets. It was like way too much. Like, okay, no, let's not do this. Let's put it on the back burner and we'll come back.
Because you're self-managing.
Exactly.
You're self-managing, right? Yeah.
Because we were self-managing at that time. And then we thought it's a smaller portfolio, we can do it ourselves. And kind of maybe they never 100% know about the property management companies that they can handle the smart portfolios too. But if we did that, we were not making much money either. So that was the other thing there. So we wanted to self-manage it. And then we put that on the back burner. Slowly we reduced the landscape too. But fast forward, I got a chance to take an early retirement from my corporate job, and I landed back into real estate. When I came back to real estate, I was looking to go into merger and acquisitions because I thought that'll be a perfect fit for me, having the corporate background and gone through so many mergers with my company on the system side. I'll land the business side merger and I'll be rock star. So, and then I was looking for some connection on LinkedIn who can help me break into the industry. And then I ran into somebody's profile. It read $400 million asset under management. I'm like, whoa, I know this guy. How did that happen? So that piqued my interest. I called him and he introduced me to multifamily. So rest all is history. I jumped into multifamily and I'm part of many syndications now. I went 2 full cycles already and really enjoying this space. And I'm super happy to have so many people around me educating them that this is another avenue to grow wealth or preserve wealth.
100%. I mean, small deals are good. They're fine if you really want to self-manage. That's the thing. But you're gonna pay for that work. You know, it's not free. Where with big multifamily deals, there's enough cash there. There's enough juice to make a small change and get a big change to the NOI, and you can hire pros to keep an eye on that asset all the time. That's really the key thing, right? That's really what it was. Yeah.
That's true. Yeah, I agree on that because there are multiple eyes on the deal because multiple people are involved, not just one syndicator. There's a whole team involved and multiple eyes on that. And plus, when you go to the bigger deals, you are leveraging, and leverage is the key for the multifamily. Because the bigger properties you do, the bigger leverage, you're just putting maybe 20%, like a minuscule amount of the money in the deal, and the returns are so huge. And this was a whole new concept that opened up so many doors for me. I didn't know all this before I stepped into multifamily.
Yeah, I mean, well, the key thing is finding the right deal in the right market, the right asset, because I think that's where many people fall flat, is that they think they have a good deal. They're buying some asset in a faraway place in a tertiary market, and they think it's phenomenally priced. Well, there's a reason why it's phenomenally priced, air quote, phenomenally priced, right? It's because it's a tough deal to get into and a tough deal to run remotely, especially if it's a small deal in the middle of nowhere, you know. So buying the right asset is absolutely key. So is that one of the, like, what was one of the first things that you learned when you first fell upon multifamily? Like what was, like, did you go through some sort of course or something like that, or you just started learning about it on your own?
I did actually join briefly somebody, but then after was learning on my own. And you said it very right, that finding the right deal in the right location is the key. And it's very, very important because a lot of time people get emotionally attached to the deal for some odd reason. They wanted to jump on that deal. Could be this reason or that reason, but that shouldn't be the case because sometimes you have to detach emotionally from the deal and look at the whole perspective, you know, which way the deal is going to pan out over the course of 3 to 5 years. Does the business plan make sense? Does the market support it? All these factors play a big role in order to make a decision whether you wanted to go with this deal or no. So there's no reason to get emotionally attached. You know, a lot of people, I have seen that they say, oh, I just wanted to invest in my backyard only. I don't want it to invest out of state, or I don't want it to go for this deal because it's like it does not make sense to me. It's too far from me, or it could be any other reason, you know, that they come up with, or they like some deal. Oh, this is a really good deal. I like the property itself, you know, it looks good, but how is it gonna make money? Is it gonna give you the returns that you're gonna be looking for? You know, so all those things play a big role. That's the reason I say I would say all the time, you have to detach emotionally from the project for the success of the project. Yeah. And there's multiple, yeah, exactly.
I was going to say, people talk themselves into liking the deal too. I've seen people do this before. They quote, fall in love with a deal. And this is the one thing you don't fall in love with. Don't fall in love with your deals. Never fall in love with your deals.
That's so true. And I have seen that because in the stock market too, it's like all irrational, emotional decision people make. They write some stock and then, it's a basic, I would say, art and science, whatever you call it, in the stock market too, right? You buy the stock when it's low and you sell the stock when it's high. Same thing is applicable in the real estate. You buy real estate at a low or a right price and then you sell it at a higher price, right? But most of the time, what happens? You buy the stock at higher and sell it at low because there's emotions attached to it. Okay, stock is going up, it's going to go up, let me get it. And then when it's falling or it's going down, you feel like, oh my God, I'm going to lose money, let me get out now. So this is the common trajectory for most people, whether it's a real estate or whether it's stock market. I mean, it's common sense, but I would say common sense is not common a lot of times,
Well, no, it's not. It's not, and I think that's part of. I guess we were talking last time and in the green room a little bit today about how you can't really get too attached. Well, how should I put it? Experienced multifamily investors, they know how much to pay for the right asset, for the right deal. At least what's when it's presented to them, and they look at the dollars and cents. They avoid getting into the emotional side of things. Don't get emotionally attached to it. That's like the kiss of death for many deals. Not to do that.
That's true. And you said it very well. This all comes with experience because when you do one deal, second deal, even though every deal is different, but the thing is still the basics are the same. You're going to still do the similar kind of research, the market research, and then see what's happening in the surrounding neighborhood, the demographics, job growth, population growth, and then see the median income in the area. All these factors play a big role, and those kind of still the basics to any deal. You know what I'm saying? Even though each deal is going to be different, if it's a different market, even it's going to be totally different, but the research tactics still the similar.
Yep, that's right. That's right. So you started off with multifamily. Are you still doing multifamily today, or are you doing other asset classes as well?
So actually, I'm both in multifamily and other classes as well. I'm in multifamily, yes, the value adds, but we do a lot of development deals too, and I'm in the self-storage. And I do have one assisted senior living as well.
Nice. So when you made the decision to get into self-storage, what drove that decision? Did you see something happening on the multifamily side, or did you just decide that you just wanted to just get different exposure to different types of assets?
I actually wanted to get kind of diversified, have different asset classes too. But the storage, there's a story behind it, because one of my good friends, they were investing big time in storage. So there was putting lots and lots of money in self-storage. They're trying to build ground up self-storage. So when the opportunity came, and I wanted to avail that, because to me it was just like no brainer, the opportunity came. If I didn't avail it, that could have been bad on my part. So I got a chance to partner with somebody from for the ground up self-storage. And it's like a super awesome deal. We're gonna be finishing the construction this year, hopefully towards the end of the year. And we are looking to hold this for long term. But it's a really, really good opportunity, huge facility, about 600 units plus.
Oh, wow. Nice. Are you building it all in phases or just one 600 unit deal?
It's a 600 plus units, yes, one deal.
Just by itself. That's beautiful. Mm-hmm. Yeah, that's beautiful. Because those types of deals always follow multifamily, right? Mm-hmm. In terms of growth, right? So if there's a growth curve for multifamily, self-storage is right behind it, like in terms of growth, right? So it's always been a very curious asset class for me, but I never got into it just because I'm not a pro at it, and I want to become a pro, or at least align myself with a pro. And I'm just buried with development and net lease. So you know what? I'm going to stay in my lane. But I do love that asset class. It's a phenomenal asset class. It's a great.
It is. Right, yeah, it is actually. It's even better than multifamily in some aspects because it's a low maintenance, and the one that we are building is a fully climate control, and it's going to be fully automized. I would say fully automation is going to be there too. So it's going to be very less on the management side. And self-storage, I will just see as a whole, is sometimes, I would say a lot of times, even better than multifamily. If you look at the upward trajectory for the multifamily, like you're talking about, the multifamily is going to go up, self-storage is going to follow. But even if people are downsizing from the multifamily or from their single-family homes, where are they going to go? Self-storage. Yeah. So people are going to use the self-storage to store their things, So self-storage always going to go up or do better, even than the multifamily in some aspects.
Oh, 100%. No, I'm a big believer in that, because especially if you're building stuff, like you said you are, right? It's that kind of stuff, fully automated. You don't have to have anybody on site. The system will let the person in. They can literally go and buy a lock. They can buy the unit, buy the lock, everything. It's entirely managed with cameras. Oh, beautiful business right there. Beautiful business.
That's true. Yeah. And that's true. And then no tenant issues either, right? So you do not have to any unit turn or anything like that, because if somebody moves out or somebody didn't pay the rent for a month or so send them one notice. Guess what? Open it and just clean it, and it's ready, right, for the next tenant. So it's super easy, I would say, from the maintenance perspective.
Yeah, that's right. So how did you actually find the space, or the land rather? Like how'd you find that land? I mean, because I think that's very different than multifamily in a way, because you kind of have to think in advance as to where, to me anyway, it sounds to me like you have to figure out where the traffic's coming from and build accordingly. To get the best deal on the land, right? Is what it sounds like. Does that sound incorrect, or?
That's true. You have to do a lot of research, and then my strategic partners, they're in the Charlotte area, so they know the market inside out in the 30-mile radius. They were really bullish about this deal. Our self-storage is in Gastonia. So they researched the market, they figured out all the demographics and everything, a lot of traffic coming into the area. There was a huge need for the self-storage in that area, because there is the other self-storage is, I think, farther away, nothing closer to that. So, and then we did the feasibility study, and it came out like, I would say grade A on that. So it was a very good location and everything, and that's how we decided after all the research that this is a feasible location for us to do it. And pretty excited about that deal, actually,
Oh no, that's going to be a phenomenal deal. I think right now lending is probably a little sticky, even on deals like that. It's if it's anything like development, which I think it is, or if it's basically you're doing a development deal, so you're probably getting 65% leverage, I imagine, right?
Around that, about 69-70%.
Yeah. So it's a little tricky from that perspective. You have to make the numbers work. But if you make the numbers work, the numbers work. It all works out. So that's the kicker, right? That's the part to get working. So
that's
excellent.
True.
So, and then the other business that you're into is also senior living, right? Which is interesting, because senior living is not. It's a business. It's not necessarily passive real estate. Like, it's an active business. So now, why'd you get into that? I'm just curious.
I am actually not an operator on that. I'm just invested as a limited partner.
Okay.
I just wanted to have that asset class or some stake in that asset class.
Yeah.
So, but you're right. It's a business in itself, and it's I would say intense business. You have to run yourself. And I'm not looking to do that. So no, that's the reason I invested as a passive investor in that. So, but other than that, I'm building townhomes. We're doing luxury townhomes in Charlotte. We're doing 29 townhomes. And again, we are getting the construction loan on that, like you're saying, about 69-70%. And but the thing is, in the construction loan, most of the time the loan does not kick in until you're kind of belly up with your equity. And by the time, like for our example, we are thinking, we're going to have a few units ready already. When our construction loan is going to kick in, it's a build to sell model. We should be able to sell it, few units, and that's going to put us in a very good position to leverage those to pay back our loan. And at the same time, our construction is going on. We're building more units and selling because we are starting pre-selling our units in May timeframe this year.
Got it. That's in Charlotte, North Carolina, right?
Nice. Mm-hmm.
Very nice, very nice. Yeah, it's a strong market. It's a good market right
It
there.
is. It is a really good market, and there's a lot of people moving into Charlotte. I would say in the whole North Carolina, South Carolina, and a lot of people are moving in. A lot of jobs are going there, so there's a huge growth. It's pretty excited about that.
Yeah. Are you doing anything in like Texas, Florida, any other usual suspects, or are you just pretty much staying in those markets?
No, actually, I do have some in Texas too, in Houston. I do have a few deals there as well. But I like Texas market too, Houston and Dallas. And as soon as something comes up, definitely. I even like Georgia market too. That's the market I went already full cycle on one deal in 11 months. And we doubled up our money in 11 months because we were way ahead of our business plan and the projections. It was like super, like one of the unicorn deals. It was a super exciting deal.
So you got in early, got a good cost basis, fixed it up, cranked up the rents. Some guy shows up 11 months later and says, "I'll buy it from you," and you say, "Sold."
Exactly. That's what happened.
Beautiful. Those are my favorite deals. I love those deals. Gotta love those deals.
Exactly. I love those deals too. I think we were done with our business plan within about 6 to 8 months. I would say 80%. Yeah. And then I was like, okay, we started getting offers. Like, okay, let's package it and sell it. That's what we did.
Yeah. Oh no! Hey! Listen. Some guy shows up and he wants to stroke a check. They want the asset that bad, or maybe it's some fund or something, or someone's got a 1031, a bunch of cash. Sell it to them. I mean, do yourself a favor, do them a favor. Everybody's happy, right? Investors are happy, you're happy, everybody's happy. So why not do it? Why not do it?
That's true.
So yeah. So good. So you're doing all this stuff. Why do you do all this? Like, what's motivating you to keep all these plates spinning? Like, why do you do all this?
There is a huge why behind all this. I wanted to touch 1 million lives in a meaningful way before I exit. So either it could be like helping people make more money or helping people who needs money. So right now I'm supporting multiple charitable causes and in India only, but eventually I wanted to go global. I wanted to position myself in a way that I'm able to pick any projects anywhere in the world that's geared towards women and children. Because my goal is to bring the next meal on the table. The way I look at it, I wanted to create some space in people's mind so they can think something else beyond food. Because most of the time they're worried about what is going to be next for them because they're so engrossed with their life. They do not have any space in their mind to think anything else. So if we can do that, create some space in their mind by giving them or giving enough resources that fulfills their immediate needs so they can think about what they can do next is the main, I would say, my purpose in this life. So I can add value to others' life that way.
Yeah. It's that's probably one of the hardest parts for many people is for many folks, doesn't matter where they are on this planet, is thinking their way through to how can I be successful. So that's probably one of the biggest things is like, and that's how you're helping these folks out is it's more than just giving money. That's easy. That's a shortcut. I think that by helping people realize that with the right education, with the right exposure to the right people, the right mindset, most importantly, you can get to where you want to go. But it really, I mean, you have to accumulate the knowledge, make it part of you, and then execute it. That's the hard part, And I mean, I talk from firsthand experience because I used to be that guy a long time ago. But when I recommitted my life to learning and growing, that's how everything changed, right? My whole life changed, and that's a tough thing to do, So yeah, hats off to you. That's great that you're able to do that. How do you do? How are you doing that? How do you get? Because I know last time we spoke, you're doing some really cool things for the children back home. That's really cool. What other things are you doing besides that to really help these people out?
Like I said, helping them with their immediate needs. So we do some pregnancy kits too for the pregnant women who are just like below the poverty line. They cannot afford anything, cannot do anything, doing a lot of food, dries, food things, those kind of things that we do. Because we're trying to provide them the things that they need for the immediate needs. Once the immediate need is fulfilled, that might give them some space in their mind to think about for tomorrow or a week from now or a month from now, like how they can improve their lives. Because if you see in this world, 90% of the people, or maybe more than 90%, I would say, I do not know what percent, but I would say more than 90% of the people, they are involved in their day-to-day life so much. They are so much entangled in their pattern of thinking, pattern of doing things. They don't want it to break that. They don't want it to get out of there. They are just doing everything, same thing, different day. They're just following the pattern every day. And then only way to break the pattern is when you're giving some space in your mind, then you are breaking the bubble that you're in or the pattern that you're in. Then you're thinking a little bit beyond that. How in the technology you might have heard the term, people used to say that think out of the box. What is out of the box? That's a pattern that you're following, a pattern on every day, on every project. I mean, even the new projects comes with your experience, whatever you have, you only know that much. You try to fit that thing, the new thing, into your old pattern. If it doesn't work, what you do? You complain. Say, oh, this does not work. I would say most of the people are like that. I'm not saying everybody, but they are on the problem solving end. They will think, okay, this does not fit. Okay, I might be doing something now. Maybe I need to change my pattern. Maybe I need to have a different way to do these things. So that could only happen once you get out of your bubble or once you start breaking your patterns. And then when you give that freedom to somebody, to yourself, if you allow yourself to have that freedom, that I'm going to think beyond what I'm thinking, and also you're giving that freedom to somebody else that they're thinking beyond the next meal on their table, it's going to change their life. Maybe not immediately, but eventually.
Excellent. So good. So, you know what? I think part of the game is to try to help other people, and I think I love the way you're doing it. Because you understand that when you're in a position to help other people, you've built a lot of wealth. You've built a lot of wealth for your investors, for yourself. You can now pour from a full cup, and that's a very, very important aspect of this. Like Tony Robbins says, you can't pour from an empty cup, meaning that if you're broke yourself, you shouldn't be helping other people. You got to help yourself first before you start helping other folks, right? It's not about being, how should I say, greedy or whatever. It's about being in a better position to have the cash and resources available to help someone, to actually help them for real, as opposed to just giving lip service, right? So I love what you're doing. That's phenomenal. That's great.
Thank you.
So now that you're doing all this, okay, you're building all this business stuff, and you're pushing hard to grow the business, and you're doing a lot of other things. Where do you see the business going in the next 18 to 24 months? Like where do you see things headed, given where we are today, sitting here in what I think we're still in Q1, Q2 now.
Yeah.
Q2
now.
Moving fast. What do you see happening? What do you see happening in the next 18 to 24 months?
I think it's a lot of uncertainty for the new investors. It's very hard to jump on the deals right now or ride this wave. But I would say one thing over here. It's very important to see in the long term, see what the long-term vision is for you or for your investments, because this is a long-term game. It's not a overnight getting rich game. And despite of the market conditions that we are in, it's not gonna stay the same, because change is the law of nature. if you talk about that too. Things gonna change over time. And then if you get into the deal now, 5 years from now, it's not gonna be the same conditions. It's gonna be much better. And I'm gonna use Warren Buffett's quote over here. Warren Buffett said very well that when people are fearful, get greedy. So maybe this is the time right now to get greedy. If you have the funds, if you have the money, don't sit on it. Banks are failing too. There's no point of putting money in the bank either, like you saw the Silicon Valley Bank and the other bank, So real estate is a stable asset class. This is something concrete that you're buying, or that you're buying the shares for something concrete, right? So, and then you cannot really go wrong. Again, whatever I see, but I do not have a crystal ball that has been broken a long time back. But my way of looking at things is because you're in the game for a long term. And in the long run, it's going to be all good. It's not like that you're getting into something right now and you're selling it tomorrow. And long term, it's going to be good. Real estate is going to be good because if you look at the historical data, all the people who are the millionaires, billionaires, they are made out of real estate. Real estate been an asset class, a solid asset class over the years. So if the history supports that, and why not then, right? And then every 10 years you see this market cycle. Every 10 years you see that. And if you do not avail this opportunity right now, so you might have to wait another 10 years that you get something similar way. Maybe not exactly similar, something different. Like 2018, we had something. It's not exactly the same that what we are seeing now, whatever happened in 2018. But we have the window of opportunity right now here to do something. Whether you're an investor, whether you're a syndicator, whatever role you wanted to play, there might be a window of opportunity for you to act right now. That's the way I look at it.
Yeah, absolutely. No, I totally agree. Getting into the real estate game, either as an LP or buying real estate on your own, I think these days getting into bigger deals makes more sense because the cost basis on a per unit is better overall. And we're becoming a renter nation, right? That's no secret. Everybody knows that. When we're at a 3% interest rate, roughly, anybody could have, well, not everybody, but most people could have bought a $500,000 house. Now we're at over 6. You can literally cut that in half. Your buying power is literally cut in half. Mm-hmm. So now that for that same house, right? And if that's just to buy a $250,000 house, you can imagine what's done to the rental markets too, right? It's virtually impossible for anybody to actually buy a house anymore. You have to rent. You have to, and that's where it's headed. So I recommend to all my friends, get into the real estate game. Do it now. And we have deals that make sense. They're not stupid deals. I know you don't do stupid deals. I don't do stupid deals. It makes it so much easier when you don't do stupid deals, right?
That's true.
So
that's true. Plus, there's a housing shortage, everywhere, I think. Yeah. And then by the end of the day, everybody needs a place to live. So you cannot really go wrong if you're trying to get into the multifamily investing.
That's right.
That's a recession resistance asset class. That's what I have to say.
Yeah, 100%. We totally agree. That's why I got into that space a long time ago. That's why I quit IT. Should have done it sooner. Cool. Well, we talked about a lot of things today here. If you had one piece of bulletproof advice for someone, maybe they're considering jumping into the real estate game, either as an LP or on their own, what sort of advice would you have for them?
I would say just do it. Just do it. Don't wait. Do not get into analysis paralysis because that's what happens. You're overthinking there. Again, getting emotional, getting attached to the money, whatever. It does not happen that way. Just take an action. Just do it. And acquire the knowledge. Knowledge is must, first of all, because think about that. Why you're hesitating, first of all. To me, hesitation is because there's a knowledge gap. Ask yourself a question, why you're hesitating, why you don't want it to do something. You'll get the answer yourself. You feel like, oh, I do not know enough. That's what a lot of people tell you. I do not know enough to invest, or I do not know enough to do anything in real estate. Educate yourself. Get the knowledge. Knowledge is on your tip of fingers. We are in the best time of our lives. It never happened in the history of the mankind ever before that we have so much knowledge, so much information available on our tips. Google it. Everything is there. Chat GPT, look for all the answers, read books, watch podcasts. There are like jillion podcasts out there, YouTube videos. Information is right there. You just have to take action. That's about it. And once you have the knowledge, when you're taking the action, you're going to be successful no matter what. I have no doubts about it.
Excellent.
No matter whatever roles you're going to play, whether it's a GP, LP, whatever you want it to do in your life, it's going to be all good.
Yeah. Good. I think part of it is also getting around the right people then. Don't you have an event coming up too, right?
That's true. Yes, I do have a summit coming up in April 14th, 15th, and 16th, 3-day summit. It's my way of giving back to the community. It's the ultimate summit. We have around 50 plus speakers, and come join us. It's free for everybody, and it's realestaterich.com. That's the website, the realestaterich.com. You can go ahead and register there. And we're going to have a couple sessions at one time going at the same time. So it's going to be really, really intense and ultimate summit. I'm really excited about that.
Very cool. Very cool. All right, guys. Well, if you want to reach out to Vinki, you can reach her via her website at loombainvest.com. And again, the link is in the description. Hope you got a lot out of this one here. You know, there's certainly a lot of market changes taking place, and really getting into different asset classes intelligently is the way to go. Thanks for tuning in. I'll see you next episode. Take care.
You've been listening to the Bulletproof Cash Flow Show. We hope you've enjoyed the show. We know we had fun. Make sure to visit our Apple Podcast page and leave us a 5-star review. We hope you've gotten some useful and practical information from the show. For real estate coaching, events, and resources, head up bulletproofcashflow.com. Till next time.
No information in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this show are limited to accredited or sophisticated investors. Any investments will only be made with proper disclosure and subscription documentation and subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice.